and they are flashing at the bottom.
Take it from there. While the PAT, of course, seems largely higher than estimate, because at 99.30, it's definitely higher than what the ET Now poll was penciling in, which was about 98.90. But I think, Pankaj, you would agree with me here that for TCS this time around, it's really not about the PAT or the revenues. It's about margins and margin protection alone that the street is focusing in on.
Absolutely.
Because you have, yes, exactly. Because remember, attrition has been a key concern with the entire industry, and now with most employees getting back to office, with travel costs, etc., as well included, that is something alone that's going to weigh in heavy on TCS's margin. So that particular number is the key thing that the street is going to be looking out for. Just to put it into perspective, remember the stock actually went in absolutely flat ahead of its earnings. This at a time when the rest of the IT pack was hugely underperforming today. Everything from HCL Technologies to an LTI to a Coforge to all the other stocks were rank underperformers. TCS went in absolutely flat. A dividend announcement as well of 22 rupees per share, highest ever order book, wherein the TCV stands at $11.3 billion in the fourth quarter.
Right. So I have some numbers more to give and share. 50,591 crore is the revenue number. That's versus 48,885. So that's the first number. Highest ever order book is what the company has delivered. I think you just mentioned about the TCV number at 11.3 billion. The operating profit margin has come in at 25%. When TCS talks about operating profit margins, it's the EBITDA margin that they're talking about. Their general range is between 24 to 26 odd %, so they are in line with that. Net additions of 35,209 odd number. The EBIT number on your screen, it's coming close to about 12,300 odd crores. Expectation was close to 12,500. So as Aisha pointed out that, this is a number which was broadly what the street was going with. Okay, I have some more details with me. Aisha, BFSI segment has grown 2. Anisha is also with us. She's at the location. Anisha, first reaction, revenues in line, EBIT marginally lower, but when I say marginally, it's absolute marginal.
Well, actually, I think it's a good set of numbers. If you look at the constant currency growth on a quarter-on-quarter basis, that has come in at 3.2%. The rupee revenue at 50,591 is better than our expectation. Dollar revenue at 6,696 is bang in line with what we were expecting. The operating margins, as Aisha also was pointing out, was the key thing to track this time around. And they have managed to sustain the margins at 25%, and that's the key positive. And don't forget the TCV number, an $11.3 billion number coming in as far as TCV goes is very, very strong. Whether you look at it in terms of the net addition that they have done, or whether you talk about the other numbers coming in terms of the headcount as well. Attrition, however, continues to be a problem. On the LTM basis, attrition has come in at 17.4%. Remember, last quarter this number was 15.3%. So there is a big jump when it comes to the attrition. However, having said that,
I read the basic numbers, no?
Right. We have a first set of guests with us. Omkar is with us, as well as Sandeep. Sandeep, let's start with you. First reaction, you want me to read out some numbers, or you have seen that? Revenue is at 50,591, operating margins at 25%, TCV deal signing continues to be one of the highest. Attrition they've given for the year, that's about 17%.
No, I have seen the number broadly. It is a very good set of numbers to start with. Although I am really disappointed with the LTM attrition number, because if for TCS it is 17%, then we can imagine what will be the situation for the industry. But otherwise, if you see, the margins are bang in line, the revenue numbers are slightly higher, and all the metrics are good. TCV is very, very strong. But this is what we have been saying in our preview also, that this quarter is not a quarter where problem is the orders. The demand is extremely strong, and that is the reason the attrition is so high, because there is huge demand for manpower also. The challenge is that, in this quarter, the only number which will matter is which company is able to manage attrition to what extent. And even margins, I don't think is something to monitor, because most of the companies have started taking price hikes, so margins will be managed well. The challenge is the attrition and what is the commentary around it. That is the only monitorable in this one.
Sandeep, stay with us. We've also got on board Omkar Tanksale as well, joining in on the show. But before I take it across to Omkar, just some management quotes coming in from the press release we're just picking up. Rajesh Gopinathan, the CEO, saying that we're closing FY22 on a strong note with mid-teen growth and adding the maximum incremental revenue ever, increasing participation in our customers' growth and transformation journeys, and an all-time high order book provide a long and sustainable foundation for continued growth ahead. I think what I want to should definitely read is what the word is from the chief HRO, that's Milind Lakkad. He's saying with the highest ever net addition this year, consistently highest talent retention, benchmark talent development metrics, continued focus on health and well-being and numerous industry awards, we have reaffirmed TCS's position as the #1 employer of choice. So not really talking about the attrition numbers, which like our expert as well was just marking out, has been a little bit on the higher side. Samir Seksaria, the CFO, is saying while continue to make all the investments needed to support our growth aspirations, we managed the headwinds this year to deliver an industry-leading operation margin yet again. The successful completion, he says, of our 4th buyback in 5 years is another milestone in our shareholder-friendly approach to capital allocation. Omkar, how are you reading into the numbers?
Yeah, I believe the company have reported a strong set of numbers. The demand scenario, as Sandeep is correctly saying, they remain very, very robust and strong, intact. Of the expenditures on automation is continued and likely to continue to do so far. Even margins we can expect some bit of impact, but margins are quietly stable, which shows a strong execution in terms of TCS for it at this kind of a size that they are looking for. Yes, definitely attrition remain key concern, and because managing staff and skilled staff has become a task, one should monitor. I mean, one should focus on the management to how they are going to manage the attrition levels and execution part for the timely delivery of the projects that they are going. Otherwise, if you can see a number as a whole and consistency over the period, it looks to be strong and likely to continue for next 2 to 3, at least for 2 years going ahead.
Some more details coming in. The IT services attrition, as we understand, continued to climb, reaching about 17.4%. However, incremental attrition has actually moderated. 17.4% is the figure for FY22. What's still a miss in the details is that they've not given the Q4 FY22 attrition, and I guess that is where the problem lies.
Yeah, so maybe, we'll get some more color. Presser is just about to start. Of course, we'll be covering in the presser. Okay, Anisha is telling me that she has some more insights. Meanwhile, we were talking to our guest. She has done some more number crunching on segments on various spaces. Anisha, any further value add on the numbers after the initial take?
Well, yes, I did want to point out in terms of the segments, it is the retail segment again which has seen a growth of around 21%. However, if you look at the technology and communication segments, they have lagged a tad bit at around 15.5% and 14% respectively. The manufacturing and BFSI continues to be strong and over 15% growth coming in there. Separately, in terms of the geographies, and this is important because North America has seen a jump of around 17.5%, which is in line with expectations, slightly lower when you look at the quarter-on-quarter number, but it is continental Europe which is showing signs of slowing down a tad bit, because Europe is up around 15%, though last quarter this number was close to 17 to 18%. So perhaps it is the impact of the geopolitical tension that you can see in the number, but as I was pointing out, the key takeaway from the number is the fact that the attrition was at 17.3% on an LTM basis, and the deal pipeline of $11.3 billion is very, very strong, because remember earlier we were talking about how deal win pipeline might plateau a tad bit, might stagger, but that has not been the case at all, and they have signed 2 mega deals this quarter. So I think just attrition is something that we'll have to watch out for, but other than that, it's a very good and very strong numbers coming in from TCS this time around as well.
Sandeep, I just wanted to get your perspective about the point that Anisha was talking about. CC revenue growth is slightly higher. Margins are broadly in line to slightly positive. On an absolute basis, maybe slightly lower. Dollar revenue is just marginally ahead. Overall, the sort of concern that the street had going into Q4 numbers from IT, TCS is saying that at this size also they can deliver inline numbers. Is that what the signal coming in?
Yes, I would say so. I think that, the worry, although we didn't have any such worry, we were very confident that, this quarter is not a quarter to worry about margins or growth. It is a quarter to worry about attrition, and I think that is where we are seeing the numbers. And I think the trend will be similar. See, again, every quarter, we have 20-25 listed companies. Not necessary that everyone will give similar type of numbers. 1 or 2 can be different, but broadly, 17-18 companies out of the 20, you will see same trend. Inline numbers, no disappointment on margin, no disappointment on growth, extremely strong TCV, but everyone will disappoint from bad to worse on terms of attrition.
Right. Omkar, what will be your reaction? When I look at Accenture numbers for the last 2 quarters, their commentary, it's all been solid. However, the stock re-rating has not happened. So what to expect from TCS?
Yes, I believe the stock likely to perform good in the forthcoming quarters as the execution level that they have delivered a strong growth with this kind of a size. Even they have the demand scenario looks to be intact even after the rate has been increased in US Fed and likely to continue to do so. I believe that TCS has executed well, which will also benefit the IT sector as a whole. Because the rest companies will follow the suit and the leader. So I believe overall it looks to be a strong quarter and definitely will be a positive on the IT sector as a whole and also on the TCS.
Well, Omkar, the worry that the street was having was regarding whether the revenue will slow down, whether the margin profile might weaken going forward into the numbers or not. Now we have seen on an annual basis, TCS has delivered a 17% growth on a year-on-year basis, and that's a very strong number coming in. Do you expect some changes when it comes to your estimates, given the fact that the demand momentum has been stronger than what street expected, and despite a high attrition number, the company has been able to manage the margins, so that worry is also out of the picture now?
Definitely, I believe the company is doing strong in terms of execution level and the demand scenario likely to impact. I will listen to a commentary on the management and I'll definitely rethinking of tweaking my model again. But on a prima facie basis, yes, definitely. I mean, from the execution part, I mean, for the attrition, the company, the hiring continues to be strong for the timely delivery of the projects and the automation part. I think the company is very well experienced in terms of managing attrition. Definitely, in a short or in the short period of time, they will definitely will face the crunch, but they are managing the business from last, I think, more than 25 years. So it will definitely will they control and on the longer run horizon, and they will execute it going ahead. So I don't think, I mean, it will be a matter of worry for a longer run horizon in terms of margins and also in terms of attrition as so far. So I'm a bit positive on the side of the IT. I mean the TCS.
Okay, Omkar, that point is taken. Sandeep, let me come to you and talk to you about the geographical breakup, because there I'm seeing some worrying signs. India has grown at a pace of 7%, and that compares to, I think, 16% if my memory serves me right in the last quarter. And continental Europe has grown by 10% this quarter versus around 16-17%. Would that be a worrying sign for you at all?
No, see, this quarter is always very strong for, some parts, and it is a normal thing. So I don't think there is much to read about it.
And what about the pipeline and 11 points?
In the IT names, can you just talk to us about when you talk to clients, what sort of concern do they have going into Q4?
No, the clients have only one concern, that they believe that the IT index itself has done extremely well, and so they think that the outperformance may stall or may stop for some time, and there could be good time correction. That is what they are saying.
Omkar, in terms of TCS, now that the numbers are out, how would you look at some of the other numbers? What does it give you indication in terms of any sector trend that you can identify?
As a sector, retail vertical has been shown the strong growth after the slowdown, after the lockdown, and also they have shown the broad-based growth as overall, and also on the BFSI side, they have reported 14% of the growth. So I believe that the demand scenario has been more on a broad-based and also on a geographical basis. They are largely covering all across all the sectors. So I believe this is a very positive sign sign as in terms of business scenario or business vertical or business matrix, you can say. It shows a positive sign and shows the concreteness of the business going ahead. So it's a big positive sign in my opinion, sir.
Okay, the final scorecard then, revenue, net profit as well as EBIT are marginally above estimates as compared to the ET Now estimates, and the EBIT margin is coming in line. So yes, going forward, we're going to definitely want to hear out from the management in terms of what is the visibility going forward and can they continue to hold on to this kind of a margin range or not. For the stock price, of course, we're trailing close to 31 kind of a PE. So how much can it outperform from here? Can it replicate the kind of performance that IT, not just TCS, but as a pack saw from the lows of March 2020? That is, of course, a big challenge. But Sandeep, just wanted to get your take in. I mean, does TCS continue to hold pole position, or would you say that the swing is somewhat tilted in favor of HCL Technologies or perhaps Wipro?
No, see, I would put it like this, that there is a different category of players. So TCS is in the low beta category where, the numbers are visible, the consistency of management, the consistency of commentary, the lack of volatility is what investors reward for. So it is not comparable with other names. So I would put TCS in the top bucket in terms of all those things where volatility is concerned, then followed by Infosys, Wipro in second category and HCL in third category in terms of volatility. But that has no correlation with the recommendation or my preference, because my preference is a combination of value, multiples, valuations, fundamentals, technology, many things. So from that perspective, probably, I still would like to have more weightage on HCL from a portfolio perspective.
The management will shortly be speaking. It will be the first commentary that comes out probably after Accenture analyst meet that happened a few days back. What would you want to hear out? And, generally after Q4, they tend to give first time a trend for the next year. So what to expect in that?
So simple, I would only look for commentary on attrition, because that is my only concern. If poaching from each other continues, the cost of the industry will shoot up, which is not a healthy sign. So the solution, what is the solution? The solution is that actual supply should come, and so I want to understand from the management when the supply will be enough to compensate or cool off the existing attrition. That is the most important question and only question in my view to be asked today.
Sandeep, I think you're really worried about attrition. So what would you want to hear? One, of course, attrition is going up, we know. Second, of course, they may have to give salary hikes or may have to acquire from outside. So what sort of commentary would you want to hear? What sort of...
No, see, this is not the solution. I will tell you, I have worked this industry for a decade, and I can tell you right now what the industry is doing, they are poaching from one another. And that is unnecessarily putting the cost up, and real solution is not that. Real solution is supply. So we want to hear what they are doing for supply. Is that training being accelerated? For example, if the average training period is 12 weeks, can they cut it down to 8, 7? Because that is the real solution. Supply has to come. You can keep on poaching from one another, it will not help. You have to have supply. So I am only concerned about what is the commentary on supply, what actions they are taking to quicken the supply. That is my question.
Right. So that was Sandeep's view. Omkar, would you also be so worried about attrition, or would you want to hear about their commentary on attrition? Okay, I think Omkar is not with us. Sandeep, let's talk about the larger trends as well. Just in terms of PE expansion, PE derating. So, we've seen Accenture, how the PE has derated. A lot of brokerage reports have pointed out that time for technology derating has probably started. Looking at this number, what is the sense that you get? EPS will get upgraded, downgraded, or it will be absolutely neutral?
No, I think, this quarter will not result in any upgrade or downgrade. This quarter is a confidence building quarter. I think it will give little more confidence to the investors who were worried that, demand may be weak going forward and all that. But still, I think the real comfort will come once, this companies tell about what will be the supply side situation in next 2 to 3 quarters. That is what will soothe the nerves of the investors, if at all.
Sandeep, what's the big fear when it comes to attrition? Does it seem like this could be a structural issue with the industry, which they hoped previous quarter is going to get resolved? And many management said that, They have visibility of the next 2 quarters within which it's going to get resolved. But does it seem like this could head into more of a structural issue for not just TCS but for the entire industry?
No, I don't think it will be a structural issue. The real problem is in the numbers. If you see last 5 years, recruitment was almost negligible. And that was because, the demand or the growth for the industry was low. Now, suddenly after COVID, what has happened because of work from home and all banks aggressively recruiting and all the things coming together, demand has gone through the roof. And, because of that, there is a massive shortage. And remember that, for a fresher to start executing at the good pace, it takes, a 6 to 9 months of partial and complete training. So that is the reason we are stuck. And I completely agree that, if this Ukraine and Russia issue would not have cropped up, probably we would not have seen such kind of attrition even in this quarter. So my view is 1 to 2 quarters, maybe 2 quarters attrition will fall, but don't expect it to go below pandemic level or at the pandemic level, because if it goes to pandemic level or pre-pandemic level, I will myself downgrade the whole sector, because then it is a negative sign. It means that, demand is not good. So I want good attrition, but not this level of attrition.
Thanks so much for that. After the con call, the press conference, whatever your final take on the FY 23-24 numbers are, we would once again like to chat with you. But you're saying that it should be a neutral quarter and a more confidence-building quarter rather than an EPS number. On that note, we're taking a break. Coming back quickly. Stay tuned. The press conference of TCS scheduled at 6 p.m. should start anytime soon. Live coverage of that will continue.